exciting, and entertaining programs anytime, anywhere. AIT Cloud TV is available on the web on www.ait.app, Apple TV, Amazon Fire TV, Roku, and Android TV. You can also download the mobile app from the Google Play Store or the Apple App Store. Simply connect to the internet, download the app, register, and watch live or catch up on unlimited hours of exciting shows. AIT Cloud TV. TV on the go.
The Nigerian Capital Market Committee had its first quarter meeting in Abuja with over 280 executive management and senior staff of the Commission, capital market operators and representatives of key government agencies.
The ISB also has provisions for regulation of commodities exchanges and other operators in the commodities trading ecosystem. This is a significant development for the Nigerian capital market. The bill is expected to be presented to President Muhammadu Buhari for his assent. Another important issue mentioned at the meeting was the approval of rules on the revised National Investor Protection Fund, NIPF, and the registration of 5 new fintech companies as full-fledged market operators, comprising 2 crowdfunding intermediaries, 2 digital sub-brokers, and 1 robo-advisor. The Financial Literacy Technical Committee informed the meeting that as part of efforts to introduce capital market studies into both secondary and tertiary educational institutions, the Nigerian Educational Research and Development Council, NERDC, has been providing all the necessary support to the committee. Also, the committee has organized a series of public enlightenment programs through conferences and social media platforms. Issues around the importance of protecting the interests of minority shareholders when public companies delist from the NGX were raised by members who expressed investors' concerns. The chairman reaffirmed his commitment to spare no effort in fulfilling the Commission's mandate of protecting both minority and majority shareholders.
The meeting was officially by the Senate. Some of the provisions in the ISB include stiffer punishments for operators of Ponzi schemes, expansion of the categories of issuers of securities, and better coverage of some new products, among others. The ISB also has provisions for regulations of commodities, exchanges, and other operators in the commodities trading ecosystem. This is a significant development for the Nigerian capital.
central bank and ministers of finance globally would normally want to attend, because it affords opportunity for us to review what has happened in the last 6 months. Like it happened twice in a year, in April and in October. And we all know that still the global economy still faces a lot of challenges. And both in the statutory meetings and some of the private meetings, issues bordering on global challenges have always been highlighted. You all know that post-COVID, the global economy was beginning to recover quite aggressively. Interest rates have been were on a very low for a sustained period of time. Inflation, particularly in the Euro and developed economies, have also been low. But unfortunately, as a result of the challenges that came up in 2022, Russia, Ukraine, high interest rates and inflation in the US, and the need to raise interest rates and its impact on other economies, we got into where we are today. The forecast at this meeting remains that yes, a lot of work has been done in 2022. Growth is gradually returning again, but it is still at suboptimal level. Inflationary pressures continue, even though inflation is coming down as a result of measures being taken by monetary authorities to bring down the inflation rate, but it still remains at very high levels globally, to the extent that even inflation projected at 7%, global inflation projected at 7%, remains very high. And the high point of all the consequence of what we've seen in 2022 is that poverty, and it was very well discussed here. The poverty levels have risen quite astronomically. Over 700 million people are being struck by poverty. Food insecurity has also risen quite tremendously, to the extent that over 350 million people globally are hit by extreme food crisis all over the world. Even the IMF themselves also talked about the fact that even the debt portfolios, the lending portfolios, have reached all-time high in 2 decades. This is the highest level of debt portfolio that the IMF has seen in its books, and they are unfortunately warning that they may not be in a position to do much for countries that really require more debts to be able to restructure their balance sheet and then keep going on. So focus remains that the monetary policy that monetary authorities must continue to focus on inflation so as to bring it down. But while monetary authorities are doing their work to bring down inflation, they must also keep their eyes on banking systems stability through monitoring in the supervision and regulatory frameworks and the rest of them. For the fiscal, of course, because of the limited fiscal space, the IMF insists that countries need to reduce their spending. But in my case, I would say, well, if you want to spend, then raise revenue to be able to spend. So that, that's what you would imagine that politicians want to hear. But I think it's important that you must raise revenue and not get yourself constrained in an environment where there is no debt, where financial market conditions are very tight and very limited, where interest rates are high and they create a lot of burden for economies. The only option for fiscal in this case is to expand the revenue base so as to be able to spend.
All right, expansion.
But we actually developed a technical working group, and we developed a framework for the 2021 report. We started this intervention in 2017, and we decided that we wanted to look at security and infrastructure. Of course, the regulatory environment is like the bread and butter of ease of doing business, but we wanted to look at workforce readiness and access to information. And it's because these are the things that small businesses and any sort of investor wants to know. If you want to situate a business around maybe Adamawa, for example, you want to know what kind of labor is there. Do they have an investment promotion agency? What is the regulatory environment like? Is it safe? Is it secure? What's the infrastructure like? So that snapshot is what our basic framework, initially 4 indicators. But after feedback and after engaging states, because the first report was a baseline survey, didn't have any government input at all, and it's a perception index. So it's a perception index of what private sector felt about each state's business environment as at that time.
Welcome on global financial stability, monetary policy, fighting poverty, and some of the other challenges that have been plaguing the world. In fact, at this meeting from the IMF as well as the World Bank, it's been said that the world is going through crisis upon crisis, one shock or the other. Now, we will be taking you through excerpts from the IMF briefing concerning Africa, but I'll just give you a few hints of what the report says, a big funding squeeze that is impacting Africa, and I also do think that our policymakers should take this seriously. Some days ago, I've always also told you that our Nigerian policymakers are here. The finance minister, Zainab Ahmed, as well as the central bank governor, have been representing Nigeria in different high-level meetings. But if we take a look at a summary of what the IMF has said in the report for Africa, some things that we really need to take away. A funding squeeze has hit the region hard, and the funding squeeze are aggravated, protracted trend that has been years in making. The IMF is also of the view that public debt across the continent is increasing. If you take a look at Nigeria, for example, Nigeria has a debt, according to the Debt Management Office, of 46 trillion as of December 2022, that is expected to rise after the ways of means of the central bank are securitized. What will that tell us? That we will have a debt problem of close to 70 trillion naira. But let's quickly take Abebe Selassie, who is the director IMF, who is the director African Department at the IMF.
Education, of course, infrastructure. This will not only impact them now, but also in the years to come, as by 2040 or so, a third of new entrants, new labor market entrants will be from sub-Saharan Africa. Skilled, educated workers will be vital to the health and stability of the global economy, but today's funding squeeze may impact the region's ability to provide them. I've always said that this is the African century. But if measures are not taken to address this funding squeeze, now the region may be held back from developing its potential. Here at the IMF, we're playing our part. As of last month, we had 21 lending arrangements with countries in the region, and with still more programs under request and under discussion. And between 2020 and 2022, we provided more than $50 billion through programs, emergency financing, and special drawing rights allocation. We're also, of course, continuing to provide capacity development and technical assistance and training to our members, and we'll continue to do so in the coming months. In terms of policy priorities, we are flagging that there is a need to first consolidate public finances and strengthen public finance management. This will rely on continued revenue. This needs to rely on continued revenue mobilization, better management of fiscal risks, and more proactive debt management. In countries where debt levels are elevated and debt is clearly unsustainable, restructuring is going to be unavoidable, and a well-functioning debt resolution framework will be vital to create the required fiscal space. A second priority is to contain inflation. The inflation rates are varied across the region, but remains elevated, much more so than we've seen it for many years now. And monetary policy needs to focus on keeping inflation firmly on a downward trajectory and make sure that it returns to central bank's target range. Third, I think, is a need to allow, in those countries where exchange rates are flexible, where the rate is flexible, the exchange rates to adjust while mitigating adverse effects on the economy. And then finally, climate change is, of course, increasingly something that is weighing on policymakers in the region, on our people, and tackling this, including with support from the international community, will be very, very important. The region is not a source of emissions, as you know, but rather it's on the receiving end of a lot of the climatic changes that are taking place, and pursuing policies to help with climate adaptation and mitigation in a few cases where that's a challenge will be important going forward. Let me stop here and
we will.
Questions.
Thank you.
So on fuel subsidies, as I said earlier, I mean, how and whether to subsidize and to what extent, honestly, is a very deeply domestic and deeply political question. If governments want to do that, that's fine. But we think it's suboptimal, as I said, for reasons I explained earlier, that the benefits of subsidies tend to accrue to richer households. But if that's what government is deciding, that's fine. Removing them also, I think, is of course part of this political and domestic debate that needs to be had. We know, of course, in Nigeria that fuel subsidies eat up tremendous amount of resources. At the same time, that the government doesn't have resources to address the huge investment needs from health to education to infrastructure. But this is a choice for Nigerian government, Nigerian civil society to make. We've also heard the discussion that's going on, the debate that's going on whether this is ideal. We try and inform that debate with numbers, with practices elsewhere, and I think that's our role, and look forward to whatever decision the government takes. On debt, again, whether debt is sustainable or not, is not dependent on just one number, one threshold, but rather, really a lot of, you have to look at a lot of indicators to assess, the trajectory, whether that will be sustainable in the coming years or not. And I think, it's really, when we make an assessment and we classify countries as being, moderate risk or high risk, or we talk about vulnerabilities being elevated, it takes into account, what we think are the kind of policies that the government's going to pursue, and of course, certain assumptions about the global environment. The last several years has been full of shocks, so it has made countries' ability, to bring debt on a sustainable trajectory more difficult. But, they've been compensating for that also with stronger economic policies. So for a country like Nigeria also, the future trajectory of its economy is going to depend on a whole host of variables, the reforms that the government pursues, how effectively it uses the resources it has, the oil price trajectory. So it's a combination of those factors that will determine the sustainability of Nigeria's debt. Right now, it looks manageable, but it's really also important, of course, and contingent on what policies will be pursued in the coming months and years. I think, as always, the extent to which monetary policy will help, address inflation is going to be dependent on a whole range of factors. I think if you have largely negative real interest rates, I'm not sure that that is conducive to the kind of signaling effect that you want to have, either in terms of supporting the exchange rate or the credit channel. When you have multiple exchange rates, that also becomes a lot more complicated, right? I mean, which exchange rate do you use as a benchmark? So, all of those things have to be factored in. Again, we're not absolutely dogmatic that it always has to be about interest rates increases. So that will work through the credit channel, as you said, for a large part, some by mobilizing a bit more savings. But, there are cases also where we support, managing liquidity. Even other cases where the financial markets are even more rudimentary. So outright monetary targeting, explicit money targeting is what will work. So I think a combination of those factors think that way. So on inflation, on the inflation challenge, again, this tends to be, of course, unless you're part of a monetary union, there's a lot of variation in inflation. Food prices having been elevated after Russia's invasion of Ukraine, that also is a channel through which inflation has risen. But, as we look across the region, there are also countries where clearly it's domestic demand pressure or monetary policy. Part of the answer to addressing inflation, but again, how you calibrate that depends on country-specific circumstances. OPEC oil price increase, as always in sub-Saharan Africa, it will be asymmetric. In general, it will be negative because I think out of the 45 countries, only about 8 are net oil exporters. So those other things being equal, whether you have subsidy or not, etc., should benefit from higher oil prices. But for most other countries, it will be a source of, a negative shock. So it will amplify imports, foreign exchange demand, and at the margin also inflation. So, good question on the thought process that goes into what we highlight. This, of course, again, as I say all the time, a very heterogeneous region. So really, the circumstances differ incredibly across the region, from growth to fiscal outcomes to the debt picture. And, a lot of the conversation, though, about Africa, the narrative has been about debt. And indeed, the debt vulnerabilities are the most elevated they've been in many years. I would say maybe even since the turn of the century. But one thing which we felt was not enough attention had been paid to was the role that the scarcity of financing from external sources was playing. So we're titling it a big funding squeeze because that right now strikes us as one of the big cross-cutting challenges that many countries in the region are facing. So debt levels go up as a result of what fiscal policies governments pursue, first and foremost, but also whether countries have access to favorable terms of financing. And over the years, official development assistance, which was a major source of financing for sub-Saharan Africa, has been declining. Countries have instead been relying on more costly forms of market borrowing, of course. And these are also factors that have contributed to debt levels rising in the region. Last but not least, right now we're at a moment when countries do not have access to funding markets from outside. So this exacerbates the situation, and there are countries that are not facing fundamentally a solvency problem, but rather a liquidity problem. And because of exogenous circumstances, even these countries facing liquidity problems may fall afoul of debt sustainability considerations. So we wanted to highlight the complexity of the story and also identify and draw attention to the fact that we need to support the region, including through significant counter-cyclical financing of the type that international institutions like this provide.
We'll take one on the first row.
My second question.
Oh.
Can you talk about some of the...
So again, region is, as I said, quite heterogeneous, and I also want to stress we're a resilient region, and I see sources of resilience, particularly in the private sector, even in countries where the public sector is facing balance sheet problems. You see quite a lot of resilience in the private sector across the region, really. And in terms of countries, you also see very inspiring projects being discussed. So I've been meeting delegations. Yesterday, for example, I was hearing about the green hydro project that Namibia is launching. So there are a lot of bright spots in the region also. On growth and whether we can still say the region is an attractive one. I mean, I'm a little bit partial, of course. I mean, biased, of course. So I'm going to answer that in the affirmative. I think, you know, the potential of the region is perhaps the least tapped globally. So I think, you know, investment opportunities are galore. Why aren't these investment opportunities now being taken up? Partly on account of policy, partly information asymmetry. So there's a range of factors that have to be addressed. Sometimes it's the lack of infrastructure. But, you know, I have absolutely, you know, no doubt about the potential of the region. So, I mean, it goes back to, I think, something that we've been flagging over the last many years is what we saw in the last 10, 15 years is indeed growth that has been influenced much more so by, you know, government spending, the investment in infrastructure, in health, in education, and we need, you know, a